Alright, what's going on, everybody? So, I'm going for a little coffee run. Wanted to make a video real fast for you guys. Woke up this morning and global markets are pulling back. I mean, I would say crashing, correcting. They're pulling back. All the indexes in the US are down like 500 points or 1.5%. Indexes in Europe are down 1.5%. So this is getting pretty crazy what we're seeing today. I mean, this is global, and seems like a lot of investors are pouring into bonds right now. I saw one article from the Wall Street Journal where this hedge fund guy, said that we could be, he said that we could fall 5% before things finally, settle down. So we'll have to see what happens here. But the yield is going down on the bonds, because people are rushing into them, which is kind of interesting because the lower yield should help the tech stocks, but that's definitely not helping tech stocks at all. And it was a great run. We were due for a pullback any day, and we got it. So I'm going to be watching the markets. Maybe we'll get a dead cat bounce because of the gap downs, right? The stocks have gapped down so much, some of them, that we could get a dead cat bounce. Maybe not, though. Maybe we just keep falling and falling. Maybe we fall 10% on this pullback, But it was due. It was coming. It was stupid for me to have... I bought 2 square calls. It's not that big of a deal, but I wish I would have hedged with some puts, but I definitely shouldn't have bought them so high up, on the daily chart at least. So, yeah, I'm gonna have to figure out what to do to, how I'm gonna play this trading. Definitely want to be careful because these dead cat bounces, sometimes they don't last all that long. That's if we even do get a dead cat bounce. And I definitely don't want to jump in calls if we're only going to go in lower. But I don't want to get caught in puts, only have a dead cat bounce today and be down. So I'm going to be very, very careful about how I play this. I've already made this week over $1,200. So I don't want to screw that up. I really don't want to give any of that back. And, it's probably going to be a very volatile week. We've seen pretty much just a straight shot up the last couple of weeks. Also, the VIX, the volatility index, I believe is what I read. I didn't look at the chart, but I read it surged above 20, that's getting pretty high. Like 26 is 100% market correction territory, but it's been in that sort of 15 to 17 range for, I don't know, a good month or so now. So to see it, in pre-market and after hours yesterday jump up 20 to 20, that's pretty high. It looks like gold is actually up for the 7th consecutive session. That's what I saw on the Trading Economics website. So yeah, going to be a very, very interesting day. Going to be a very interesting rest of the week. June was pretty bullish. It was pretty bullish, but I'm trying to think if we had a major pullback last July. But this is just sort of the ebbs and flows. This is another reason I don't like a lot of overnight risk, right? Because, for instance, my brother's holding Bank of America shares. I think his average price is like, I don't know, 38 or 39. Well, anyways, Bank of America is almost down to his average price now, which could be a buying opportunity, but let's say Bank of America, drops another, I don't know, $3 or $4 in the next couple of days. That position will be in the red. So it's the overnight risk is kind of just a little sketchy, which is why I prefer to just sort of day trade and not. I did hold a couple of these Square contracts overnight, which was, I was down on them by the close, so I should have just gotten rid of them, but I didn't. And you know, so I'm gonna have to face those losses this morning. But you know, it's no big deal. You can always be made back. But yeah, you know, this is why I don't like the overnight risk, because you just never know when these institutions are going to you know, bring down the markets, because it's the institutions. I'm not saying it's a vast conspiracy, but it is the institutions that have the buying power or the selling power to put that much pressure, you know, to the point where it can move the markets, right? That's not retail, that's institutions, that's hedge funds, that's banks, you know, very big investors is what drives you know, the supply and demand. And so you want to try to trade with them. You don't want to be on the wrong side of things. But yeah, that's my little morning report for you guys. I want to do more videos. I've just been kind of doing them as I'm on the go, because it seems to be the easiest. But I want to do more videos, offer you guys some more, you know, just what I'm following. So if you like the video, give it a like. Comment down below, you know, if you're going to be trading, or if you're going to be buying some shares. Maybe you're going to be putting on some long-term positions. Maybe you're going to be shorting something. I'd love to hear about the moves you're trying to catch. So comment down below, and as always, until next time, God bless.